Welcome to the very first webinar with Signal Center. This webinar is about our collaboration with Signal Center. Along with me today is, as always, Nick Colson, our Senior Account Manager. He will be assisting us today with the webinar. And more importantly, if you guys do have any questions around the actual Signal Center or even the platform, ThinkMarkets, as usual, you could actually send us all those messages into the webinar chat, and Nick will do his best to make sure that he can actually answer all those queries for you. So, what is Signal Center? So, are you tired of guessing when to buy or what to sell? It is pretty much a guessing game when you do tend to pretty much look at what's happening in the news and you heard some sort of a fundamental news come in, whether it's a commodity price shake or whether it's a currency pairs or some stocks going up or down. You do want to trade, you do make some trades and end up making some losses and some profits. However, there's no consistency, and we are pretty much getting to a point where we have more losses or might as well have more gains than more losses. So that's pretty much a guessing game that we are doing. So to avoid that guessing game, we have partnership with Signal Center to allow our clients to actually provide a service where they can rely on and actually pretty much use that as effectively when they're making a trading decision. Now, simulated performance results. This is interesting because all the results that I'm going to share with you today, because this is a data that we have taken directly from Signal Center, it is actually not the results from the actual traders. This is the analysts have given us this data from the simulation they have done over the years of results they have back tested. So it's important to make in consideration that the back testing of performance differs from the actual account performance, because the investment strategy may be adjusted at any time for any reason and can continue to be changed until desired or better. Just a few seconds and I'll move on to the next slide. So what's on the agenda today? Why did we decide to run this webinar for you guys? Importantly, we want to discuss the essential factors for the traders, what sort of key elements and what sort of key factors that we do have for our traders, how actually Signal Center helps to solve those pressing issues for the traders, and why we as a ThinkMarkets decided to partnership with Signal Center when there's a lot of providers out there globally. Why did we decided to actually partner them up with? And more importantly, we're going to go deep in Signal Center performance, and we're going to find out how to actually use these signals effectively. So who am I? Gulfam Khan. I am the head of sales here at ThinkMarket Australia and New Zealand. I have about over 10 years worth of experience in financial service industry. I have worked in different brokerage across the globe, including Europe. I've been working, started my career with NAB Trade back in 2013. And I myself have been a trader as well for many years now. So more importantly, I am committed to educate clients on how to generate long-lasting results through trading and investing. If you do have any question, feel free to reach out to us through the chat. We'll be more than happy to assist you. Now, let's talk about the essential factors that we discussed earlier that we wanted to discuss on this particular webinar for a trader. So let's say one day you wake up one morning and you decided to become a builder, a doctor, or a Michelin chef. Now, in all these three different professions, what we do see is there's one thing in common. And what is that? If we look at it deeply, there is a process involved, a systematic approach involved to become any of this profession. You can't decide, or you can't wake up one day and decide to be a builder, a doctor, a chef, just because you wanted to be one. There's a process that everybody needs to go through. There's a systematic approach that we need to follow to make sure we become good at what we wanted to do, because otherwise we won't be able to achieve any results. Becoming a trader is exactly the same. It's no different to becoming any of these professions that I've just mentioned. You need to have a systematic approach and a process to follow in order to be a successful trader. Now, a systematic approach or a process, what does that actually involve when it comes to trading? I can't really tell you about more about how to become a doctor and everything, but what I can really talk about is actually when we're talking about being a trader, what is that systematic approach? So, buy entry points. Have you heard of this term? Sell entry points. Now, stop losses, take profits, how much risk per trade, all these things that I just mentioned. I mean, let's talk about this buy entry and sell entry points. What it is pretty much when to actually enter into the market and when to exit the market. This is the first and foremost important thing. And when and where to put a stop loss and where to put my take profit. What it is pretty much making sure how much profit and how much loss am I willing to take on each particular trade. Pretty much like your risk management. If you're not sure that how much are you willing to lose and how much you're willing to make on a particular trade, then we're not doing something right here. And how much risk per trade, and that's pretty much positioning your position size, that how much are you willing to put a stake on when you go into this volatile and live market. Without all these things, we're pretty much incomplete when it comes to trading. And what Signal Center does, it actually assists us in solving all these key factors to become a successful trader. So, who's behind Signal Center? Let's meet Joe. He's the Chief Investment Officer of Signal Center, and his colleague, Steve. They established Signal Center back in 2007. So we can imagine that they've been around for many years now. That's about 13 years they've been around. But the good thing about this is back in 2018, 5 years ago, they've actually become FCA licensed, which not many signal providers, companies out there who actually licensed. What they've been doing, they've been working with the top tier brokers who are actually really keen, just like us, to educate their clients and give them all the avenue to make a better trading decision. What Joe does is he's a member of the Society of Technical Analysts, MSTA, and a chartered member of CISI. Previously, he has also worked in a banking industry, HSBC. On the other hand, Steve has a trading career over 30 years. So one can think in 30 years amount of time somebody's been trading, he must have tested if not hundreds of strategies, and he would have done a lot of work in order to make those signals and test them and back test them, and then finally be able to make an ecosystem which he can actually deliver to his clients. And then obviously he has been starting to trading with commodity trading on the Baltic Exchange before moving to life and financial markets. Now we'll look at what are signals. This is a dashboard when you actually have access to your signals on your MT4, MT5, and TT web. You will see a dashboard like this, right? So what is it going to look like? And I'm going to show you that what each and every different buttons actually pretty much tells you on this particular page. First of all, we'll look at a language. If you preferred any other language than English, you could change it from here. And then we'll move to the status. This is pretty much your signal status of which one you are really keen to know about. We have few expired, sell limit, sell stop, buy limit, buy stop, or live trade. More importantly, most of us actually really keen to know how the live trade works. I'm pretty much assuming that most of us are actually curious to see that live trade one. So let's move on to the next one. Now, next to it is the class, or what we call it in our trading term, the instruments. Now, one may have a preference with only FX pairs, so you can just click FX and then you can get to see all the Forex pairs. Then we have commodities. And when we want to trade gas, oil, then you have commodities. Then we have indices. So there's a whole bunch of lists there that you could possibly look at and actually customize, look what you really wanted to get signals from. And then we have crypto, of course. Next to it, there is a confidence bar that you can look at. Now, this confidence bar is actually given by the analysts. So you can see on the left-hand side that confidence 20%, 40%, 40, 40. Now, even though it is a confidence bar they're given by the analyst, on the same token, they said, maybe just don't give too much attention to this bar, because I will explain to you in the further slides of why not always we need to keep in consideration that confidence level, because that's just the analysts, what they have given us at the time. Circumstances could change, and I'll get into detail that why this particular bar is not the most important part. Let's move on to the next one. You will see there buy and sell buttons there pretty much. Generally, when we go to our platforms, we will normally see that buy button pretty much indicates that you can actually place a buy order and then your order is about to execute. Same with the sell. But here, once we actually click that button, what it does is it actually opens up the whole signal for us. So we'll go back one slide. So let's say if I want to open up NZUSD, I'll just click this buy button. So this button is pretty much click more view button pretty much for us. So it's not for execution or trade. It is more to actually view the signal in detail. Okay, so now we got that in detail. NZUSD pair, what information do we have here? It gives us a buy limit, which is 62.6220. First target, second target, we can see there's about 150 pips on the first target, then the second target, and also a stop loss. So they've given us what we can possibly look for profit, as we discussed in the very first slide, that they will, what sort of take profit we need to put in. What sort of stop loss do we need to put in? That's already there as well. And then you can also see that on the left-hand side, the actual price of the instrument as well. Now, this price on the actual signal might not be the current price because the signal might have been sent out early in the morning. They generally last for about 24 hours. So you can actually check the real-time price when you on your actual platform. So this is just the price, the time the signal was actually generated. Again, there's the entry point where we're 62.20. These are the targets. Then that's the stop loss. That how much are you willing to lose if the trade to go against you? There's some trade idea. It also gives you previous support located, previous resistance. Then there's trend line. Then we have the most important part that I really like about this is the next volatility events. As you all know, trading is a combination of not only just technical analysis, but also fundamental events as well. So this little window actually tells us that these two things are going to happen and they're going to create some volatility on this particular instrument. So what we see in this case is 8:45 p.m. We've got Treasury Sec Yellen speaking, or his speech is coming out. And then we have at 10 p.m. ANZ Roy Morgan Consumer Confidence. These two volatility events can create more volatility in this particular pair. So if you are trading and following this signal, make sure you have that in mind as well. So that's, I really like that you have that all information in just one. You don't have to go to other websites and see, okay, what sort of fundamental news are coming up before I actually trade this. You got that all information there for you available. And then we have some extra information, which is resistance 1, resistance 2, and resistance 3, which is the same with the support lines. Now, why do we have that? Some of the traders, they probably want to have a more sophisticated approach. They are looking at previous resistances, previous support lines, just to make sure there might be long-term traders and they want to go a long-term trend and they want to follow the trend. So they want to know as much information possible before they actually going live into the live market. Because it might not be ideal for a trader who just probably want to do a short-term trading, but it's case by case. It's up to your preference how you go about it. And then we have that again, confidence bar, which is pretty much similar. As I mentioned, that the analysts give you how much confident they are about this particular signal. This one's another one, which is a gauge they have. This is what we call a fundamental gauge. So this is pretty much, yes, we have a technical signal. However, this gauge will indicate what's the market sentiment is, whether the market is bullish or bearish. Green obviously indicates a bullish trend. Red will indicate a bearish trend. In this instance, we can see it's a neutral, 50-50. However, our signal is still telling us to go buy. So at times we might see a market trend might be bearish, but signal analysts would have given us a bullish signal. So as much you can have to make sure that you are following the trend of the market. It's completely up to your preference. Do you really want to go by what the market sentiment is, or you think now it's probably time for me to take a punt on the other side, considering the technical analysis I'm about to follow? Okay, so now how do we actually execute that signal if we don't want to do any work? I mean, to avoid any manual work. At this current time, we have MT4 and MT5 integrated already. So if you have an MT4 and MT5 account, all you got to do is press this trade now button, and they will actually open up a pending order for you. It will look like this. So it has everything already set up for you. It has the that price that they discussed, a stop loss, a take profit. All you got to do is pretty much select how much you're willing to how much stake are you willing to put on. So you change from here whatever price that you wanted to do, and then from there onwards, if you press a place, it will actually open up your pending order. Now, remember, this is a pending order. This is not a live trade. So when and if this price movement actually happens, when it triggers this particular point, your order will actually execute it into the live market with this particular stop loss and take profit. By next week, we will have that available on ThinkTrader web as well. For now, it is only available for MT4 and MT5. Okay. Now, what makes Signal Central, different from all the other brokerages, all the other signal providers, as we discussed? So transparency, they provide us 5 years worth of track record. This is really important. I mean, these days you do come across many signal providers that do tend to give you a history of, if not months, probably 1 to 2 years. But Signal Central gives us the transparency to go back and check their signals for 5 years. That's quite a bit of time to actually test whether it works for you or not. Now, more signals providers offer limited data, as we know. And as I mentioned earlier, they are actually FCA regulated. So it is a blessing to have somebody who's actually providing signals, but they're actually regulated as well. Now, once the position is activated, it will be closed either at a stop loss or take profit level. As I showed you earlier, once that market order is actually pending order is actually placed, there's only a few things that can happen. A, it will expire if the price doesn't actually occur. It will expire after 24 hours. So no, the order won't stay in the system after 24 hours, or it will actually execute. And then when it's executed, there's two things you're going to do. Either it will hit the stop loss, or if you have a winning trade, it will actually become your profit level. It will hit the profit level, and then you're out of the market. Now, we want to dive into the actual performance of Signal Center. Remember, I actually mentioned that we wanted to not only talk about Signal Center, how good they are, but we want to test their performance as well, whether what sort of data they have given us for the last 5 years, and then whether that's going to be justifiable for us to actually go ahead with them. So we've done some digging on it, and before I actually dive into it, I just want to make the audience familiar with a few terms that I'm going to use moving forward. First is return. What is return? Most of you already guys know, but just for the wider audience, let's say we invest $1,000 and we want to have 100% return on it. What would that look like? It will look like that we have $2,000 in profit. So if my initial investment raised from 1,000 to 2,000, in percentage, it's 100% return on it. What's a drawdown? So if I place a trade of $1,000 initially, what's my drawdown look like? Well, 50% of that would go down to 500. So at times my trade might go down to 500. All right. So win rate. Now, win rate is trade 100 times and win 40 times and lose 60 times. Now, let me break it down to simple. Let's say you place 10 trades. Out of those 10 trades, 6 of your trades was losing trades and 4 of them were actually winning trades. So what will be your winning rate? It's 40% because 6 of them were actually losing trades. In this case, you have a 40% win rate. The next one is the most important one, which is average reward versus risk. Now, in the slide it says win $2 and lose $1. Now, what does that actually mean? So if I go back to the win rate where I had 6 losing trades, but 4 winning trades, now I'm going to actually make what sort of those 4 winning trades actually give me in return. On those 6 losing trades, I lost $1. However, on those 4 winning trades, I actually made $2. So my reward was more than what I actually lost on my losing trades. So I'm actually better off in this particular case. So I made, if I had 4 winning trades with the $2 return, my return was $8. On the other hand, yes, I had 6 losing trade, but actually only lose $6. So I'll explain that in the next slide once we actually understand the reward versus risk. So pretty much simple. When you are winning $2 and you're losing $1, or a break-even risk and reward where you win $1 and you lose $1. All right. And the next one is pretty simple, straightforward. Number of trades is either you're doing 100 trades or 1,000 trades or 20 trades or 10 trades. Okay, now I want to talk about here is the actual percentage the risk per trade in percentage. So same as I was trying to tell you earlier, that let's say we have $1,000 and we want to initially start trading with, and I'm happy to only lose $30 on that $1,000. So that's my risk that I'm happy to take. What is that $30 going to look like in percentage? 1%. So for example, SP 500, we buy at 39.80. We put our stop loss at 39.50, and our take profit is 40.86. So you can see the stop loss on this side. It tells us I'm losing $30, and that's pretty much 1% of the risk I'm happy to take on my initial investment. What Signal Center has done over the last 5 years, they have actually pretty much send that we're about to discuss their best signals. So on a server timeline and time, they issue about 40 signals every day, which normally tends to expire after 24 hours. Now, but their best signals are DAX, Nikkei, NASDAQ, A50 China. Then you got currency pairs, some of the currency pairs, AUDJPY, Euro GBP. Don't get too sad if your currency pair is not there or your instrument is not there, because they are their best signals. It doesn't mean that if in the last 5 years they continue to send these signals, their other signals want to improve. So same with they have some good signals in cryptos and commodity as well. So this is their best signals. And what we're going to do is we're going to do a bit of a simulation with their best signals so far. So if you want to trade only on their best signals, and now here what we're doing, we're just testing their strategy that what has done for them. So they've done 4,935 signals per year. And as I've shown you on the previous slide, we are only happy to take 1% risk because we're a very cautious trader. And considering I'm going to pretend I don't know much about CFD trading, and I want to make sure that I'm trying to look after my initial capital, 1% is good enough for me to give it a try to this signal thing that I've just signed up for. So my initial capital is $1,000. And if I were to follow those signals that Signal Center has sent over the last 5 years, by keeping 1% risk per trade, my return wouldn't be 404%. So my initial $1,000 would have gone to $4,004. Okay. Now, drawdown was 19.37%. Let's round it up to 20%. And what is that in dollar amount? That's $200. From $1,000, my drawdown would have gone to $200. Now look at the win rate, 46.81%. Now, someone who's really new to trading, he might look and say, hey, you've done all this webinar, Khan, but the win rate is only 46.81%. I don't know if I really want to do this. There's not even a 50% chance that my signal might trigger. But I would say to them, there's more to it, and which is the most important part that I mentioned in the previous slide, that the average reward versus risk is the game changer. That's the number that you really need to look at and pay attention to. Remember, we're talking about a systematic approach, a process, and you need to really dig deeper and understand these numbers, that how they're working for you. In this situation, your average reward versus risk is 2.35. What does that actually mean? So if I'm taking one step backwards, I'm actually making 2.35 steps forward. I'll go back to the same example when I was saying that I've placed 10 trades. I've opened up an account. I've just followed the signals. I've placed 10 trades. 6 of my trades was losing trades. 4 of them were winning trades. So those 4 trades were actually giving me $2.35, let's say, return. So what does that get me? That gets me to $9.50. And when I'm only lost $6 on my 6 losing trades, because I'm losing each trade $1. So over time, I'm making more money. I will get to that $4,004 figure. It will take me time because, like I said, it is a systematic approach. It's not a rich quick scheme. You're following a strategy and you're not just guessing, because in guessing, you might be able to make quick money. However, if you're going to stick to a strategy and do it professionally and sophisticatedly, this is what these signals pretty much provide us. They cover our risk. They give us a return rate, the reward versus return of 2.35, and then we move forward with this. Now, in a different example, where you might see some other signal providers, they might say, hey, I'm going to offer you a better win rate, which is, what can give you 60 or 70 or 80? I don't know. These days, people could come up with whatever they want. But the most important thing is, how much are you willing to risk on that particular trade? And what sort of profits are you actually getting on that win rate? Because I can give you a signal and tell you, hey, put your take profit at, let's say, 4 pips or 5 pips. That's a winning trade. And your stop loss is 20 pips or 30 pips away. So yes, when you win, you're going to win more 2 or 4 pips because it's more likely because you're going to hit that 4 to 5 pips in your daily trading. But when you're going to lose a whole chunk of your capital just because your stop loss is realistically, it's wide enough for you to actually win that 5 or 6 pips that you're hoping to achieve. So that's why it's really important to challenge everyone who is out there trying to promise you a win rate of 60 to 70%, achievable, but what are you willing to pay in terms of risk? In the same example, they're given another scenario that if you were to risk, instead of 1%, you were going to risk 2%, what would have happened then? Your 690, you would have got 690% instead of 404%. So by just taking another percentage of risk, your initial capital would have increased, and more would have gone to 6,900, your $1,000. But look at this, your drawdown would have gone to about 40%. I don't know how many people out there are willing to take that sort of risk with 40% of their drawdown to go down. So again, that's your choice. Whatever you guys think you have the risk appetite for, you use to the best of your advantage. I'm not anyone to tell you that what is your risk appetite. You select, you think that what is your risk appetite, you take it, and use these signals to the best of your advantage. So how do we actually access those signals? If you are a ThinkMarket client, it's easy and everything is available for you. You just log into your client portal, MT4, MT5 web, whichever you like. You download this MT4 and MT5 indicators plugin, and you can also actually check on the online dashboard if you have a ThinkTrader, and they're all available for you. Now, remember at this stage, the button that I showed you earlier, it's only available for MT4, MT5 to actually get that signal executed for you. But by next week, we should have that available on ThinkTrader web as well. But if you are not a ThinkMarket client and you still thinking that, okay, I can probably give it a try just for the signal's sake and see if that works for me, it's pretty straightforward. All you got to do is create an account with us. You go on our website. It says create account. Create a live account just on the left-hand side. And then we'll just fill in this quick information. You put in your ID documentations, proof of address. Once this is all in there, it only takes a short while for us to approve your account once the KYC is done. If not approved automatically, it takes about 24 hours. Now, what it does require is for you to have a minimum deposit of 500 USD. Now, there's not a amount that you need to open an account. You can open an account with no money and you can have an account. But because we pay for this service, and it's only fair that we only allow this to the clients who wants to trade, right? And for them, you're going to have money to trade with. So you're going to have ideally 500 USD. I would suggest probably have a little bit more. So once your equity fall behind, you don't get kicked out of that signal service. So you have that, and we set you covered on that one. What other reasons are important for anyone to trade in this particular volatile market? And I would say a market where everybody wants to talk about trading, but why is it? What are the other reasons that we should start trading today? Inflation, all-time high. interest rates, they are Reserve Banks of Australia, federal banks, they are combating inflation with the interest rates, but it is a big opportunity for a lot of our traders to take the most out of it. We have fundamental news coming from Russia and Ukraine inflect. That's a big event in the market happening right now. Strong versus weak US dollars. Every day we are looking at the dollar's strength and weakness, which is against certain pairs, which is a big opportunity for a lot of our FX pairs traders. Bitcoin halving in April next year, and most importantly, all this data can be looked after when Signal Center actually help us navigate those markets by sending those technical analysis signals. So these are all the good reasons that we should jump into the market and actually start trading. And that's pretty much it, guys, from the webinar today. Hopefully, I managed to add some value to you guys after this webinar. Like I mentioned earlier, give it a go with the Signal Center. It is a terrific space that they have created. We are very hopeful that a lot of our clients will take the most out of it. But for now, thank you very much and enjoy your evening.